Gold and Bitcoin both reaching record levels. You've got gold just around eyeing 2,200 level as investors becoming a little bit more optimistic about rate cuts this year. Now Bitcoin climbing above $72,000, that reaching that level for the first time ever. Let's talk about the massive climb to the upside and what's behind this record-setting rally. We want to bring in Ben Emons. He is the NewEdge Wealth Senior Portfolio Manager, Head of Fixed Income and Macro, joining us now. Ben, it's great to have you here. So explain to us and the viewer here why we're seeing the record-setting run-up in both gold and Bitcoin at the same time.
I think it's all about supply, Shauna, because in both cases there's very limited supply. And if you then have, let's say, uncertainty, which we may be dealing with a little bit currently, and a lot of talk about Fed easing, and they may go as soon as June, typically that gives gold a lift up. In the case of Bitcoin, it's about this halving event in April, and people calculated that although the final halving event is like a century from now, nonetheless, it's a limited asset class of supply. And I guess that if we're in an environment of liquidity, easing, and uncertainty, these two assets get lift up. And it's to be worth paying attention to because this is, I think, kind of a unique year going into the election.
Now, the price of gold also, as you note, has an inverse relationship to treasury yield. So what's the anticipated kind of knock-on effect that we're expecting in correlation here?
That's an interesting point, Brad, because go back to 2011, that was a year of huge uncertainty. Debt ceiling, euro crisis, lots of things going on. And gold hit the first time its record high. And at that moment that happened, there was a lot of decline in treasury yields. Now, partly that had to do with what the Fed was doing, partly had to do with the euro crisis. But it was a kind of an interesting combination to see that about a decade or about later, during the pandemic, the similar event sort of happened. Record highs in gold and lower treasury yields. Again, Fed influence there, but similar idea. So we're back to record highs, maybe going even higher, and we're sitting with treasury yields pretty much at the high end of that range. So I'm wondering, like, if we're getting real uncertainty, as in, okay, we don't know who will be president, we don't really know if the economy actually stays this strong, all those kind of questions. You could actually see this idea of like high gold prices, low treasury yields. So it's something to watch.
Ben, what do you think when we look ahead just to tomorrow, the very short term here, the inflation print? What is that going to potentially do to activity here?
Well, I think it will be somewhat volatile because, the last inflation print, there was an expectation that headline inflation would go below 3%. That didn't happen. Since that time, we've had more energy prices going up. We've also had some data out on rents. We had some data out from the PCE and PPI data that all indicates stickier inflation. So there's an expectation that actually this print will not break the 3%. And why does that matter? Because ultimately it's about headline, right, for the consumer. If that were to really start declining, that would really change, I think, the perception about how much more the Fed could cut potentially beyond what they're saying now. Mm-hmm. And so I think we're sort of sitting here waiting like this number could be a little hotter given where the economy is. And also what's happening with energy prices, plus what during the testimony came out that they're also looking at high interest rates have also risen the cost of housing, which shows up in inflation. So it could be a hotter number.
In our Yahoo Finance Interactive across the studio, our viewers can't see that, but they keep tossing up Bitcoin from time in time out, and I keep taking a look over your shoulder at that. And at these levels that we're at, I mean, you're a very reasonable man, Ben. You're a marathoner. You're well calculated here. How high can Bitcoin go as you think about the scarcity that you were just laying out a moment ago?
Yeah, this comes together with the demand for Bitcoins from these ETFs, as your colleague mentioned, like $10 billion or so got into those ETFs. And those managers have to buy the actual coins, right? It's no longer with futures or other proxies.
But that relies on people who already hold Bitcoin being willing to sell as well.
Exactly, and there's been limited selling, if not any. I mean, you could have websites that you could track the liquidation of Bitcoin. That's very limited, that's happened so far. Then you have this halving event, which again, that is actually slowing the rate of Bitcoins together with how it gets produced and mined. So it comes all together in one, and then I think that's a cocktail of then it breaks out above the highs, and how can it go? Well, sky is obviously the limit. My guess is it's going to go probably like 100,000 or so. That will be your first sort of major milestone. I think don't be surprised that you actually reach that level.
So Ben, what is your advice then to investors out there? Should they tread carefully given the fact that the price of both of these assets is so volatile?
True, because let's face it, like the gains are extraordinary, particularly for Bitcoin. I think they've calculated from somewhere like more than 10 years ago, you had bought one Bitcoin, you've made like 7 million%. Will you make the next 7 million? That's volatility, obviously, right? So clearly, you want to be careful, but think about the long-term prospect of the asset as well as in gold. Why do these exist? Now, most of the institutional investors don't really play in that space until maybe now. That's, I think, one other force behind this, that it could go higher. Secondly, it is a diversification, because if you have that high of a gain or expect a return against where equity volatility currently is, which is really low, that is a possibility for diversification in a portfolio. So it has become a more serious asset, I think, ever since the SEC approved those ETFs. So, and given the institutional interest currently, this is becoming an asset that is a diversifying asset, scarce asset in the portfolio.
And is what's true for Bitcoin expected to be the same for Ether or Ethereum? Because now we've got applications lining up for Ether or Ethereum. That's still a heavy topic of conversation and contention. I won't wade down that route, but if we see ETFs come forward, if we see more utilization come forward on the Ether side, is what we've seen in Bitcoin in this run-up expected to be the same there?
So one difference with Bitcoin, with Ethereum, is that Ethereum has unlimited supply.
Right.
Because it's a gas, right? That's actually how it's created. But people looking at the correlation between the two, and people have always said, like, well, Ethereum is really the benchmark for blockchain technology. Mm-hmm. And that's, I think, the fundamental reason for the digital currency to exist, is that central banks may not go all to digital currencies just yet, case in point, the Federal Reserve, but the implementation of blockchain technology is supported by central banks, and that supports Ethereum. So once that also gets approved as ETFs, you'll likely see the similar sort of interest from institutions and retail public to buy the ETF on Ethereum.
Absolutely. Ben, great to see you this morning. Thanks so much for taking the time.
Thank you. Thanks for having me.